Hello everybody, it's that time of the week when we look at the S&P 500. We've got about an hour and a half to the US Open. It's 1 p.m. over here in the UK. I reckon that's about 8 a.m. in New York. So what can we give you before the Open? Well, I suppose the fallout is sort of digesting itself from last week around the interest rate decisions. We saw maybe a more hawkish point of view on the outlook from the Fed, still with the potential for further interest rate rises over the next few months, maybe even into early 2024. But what effect has that had on the market? Let's have a look at the charts. This is the 15-minute chart of the E-mini futures contract. Let's go back to the Wednesday. You can see the interest rate decision, and it's been downhill ever since. And this morning, what's been going on? Let's drill up there. It was quite flat, and then around about 9 o'clock, we had some German economic data out, came off and it's been stabilizing. You see 1, 2, 3, 4 touches around that pivot point, which is 34347. So weak bearish start to the week for the S&P. And let's just have a quick look at the heat map. This is the monthly performance of the S&P 500 broken down by stock. What are the takeaways here? Well, have a look at the tech world: Nvidia, Apple, AMD, Avgo, BA, and the e-commerce businesses like Amazon, all down. Google, Netflix, Oracle, Microsoft, Adobe. Not many big winners in there. Maybe more in the energy sector. You can see XOM, CVX, not doing too badly. But other than that, it's been a pretty poor September so far. Now, let's have a look at the VIX, my favorite gauge for what's going on. And as you can see, this is the daily VIX. And straight away, you can see the volatility shooting on up through the cloud and above it. And as you know from watching the show for the last few weeks, I look for the inverse relationship, and it's playing out very nicely at the moment. The S&P off down, maybe some support around this area, but we'll dig into those charts in a minute. But VIX a really good gauge. Like I said before, got a course out on the YouTube channel at TheStopHunter, all around how to trade this. So go into the playlist. I think it's the ultimate free trading course. You'll find it in there. You can also take this down in time frames. Let's have a shorter look at what's going on in terms of volatility. 1 hour chart. Let's pull that down a bit. It's the same story. You got the volatility up at the moment in the short term. It's around about 18 and a bit %, but you can see how that is inversely correlated to the price. So negative there all round for S&P so far this week. And then into the commitment of traders data, we've got there in the middle line large speculators. Well, they were building the position, just numbers falling off there from, well, actually going more short, from minus 106,000 to about minus 132,000. You see reflected in the price there. And seasonality down the bottom. What happens this time of year? Well, we see that weakness, and then the price pick on up through December and the new year. But at the moment, it's again looking weak bearish. Some other indicators to look out for: S&P 500 stocks above the 50-day moving average in the top left there, all bearish. And then we have the same over on the right hand side, but above the 200 moving average, and again on the way down, and the indicator below. Right now above, let me just change that around, a bit jumpy there. Also showing bearish. And at the bottom there, 52-week highs on the New York Stock Exchange, NYSE, also coming off down. So sentiment gauges there, also weak bearish. Now into the longer term price action, what have we got going on? Let's look at the bottom there. Indicators just starting to turn bearish. We've got bearish also there, but onto the price action wise, we've got this nice uptrend here. We've got 1, 2 touches. So for that to be confirmed, we would need a third touch. So we could be looking at the price to pull back to the early 4,000s before bouncing on up. But we do have this Fibonacci line here just above it at 4,300, liking the round numbers here at the moment. To compare it to the volume on the right, what can we see? We've got the, so I suppose we've got this big arc again in play. There's a bit reasonable amount of volatility there, volume there, sorry, and there, bit of an arc again. Point of control way down here, 2,000, 2,100, but we got big Fibonacci number in here where that volume sticks out, 3,850 sort of zone. So I think that could be a strong area of support for the price if it did break through that sort of trend line there. In the short term, we've got some more narrowing triangle pattern upside wise. Like I said, it's got to get through this area here, the 4,800s, and then upside numbers 5, 600 and 6,000, but they seem a very long way away at the moment. Looking more range bound, so we've got this price support over here. We're going through it at the moment there at 4,300. So sort of key little area for, I think, a short-term correction, maybe down into this zone, 4,100, 4,200 sort of area. If it can stay above this, hold on to that support, then like I said, the upsides maybe in the shorter term, 4,600 or just over, and then up to those highs in the early 4,800s. For the short-term price action using the line break for a bit of a reversal setup, we've got the 1 hour chart here on the line break, 4-2 setup I use, and if I was looking to get in here, well, we're looking for a bullish reversal. We'd be looking maybe more aggressively at 4,360, a bit more conservative, maybe 4,370, like I said, for that upside push. Line break's good for spotting and helping you get in on the reversals there. Again, change the time frames to give you different perspectives. Renko charts, long term or medium term, $20 block size used for this chart. Down the bottom, we got stochastics bearish. This trend is still bullish. Got this sort of trend in place, just starting to test it. Can it go down? We've got 61.8% line at 4,300. Big gap in volume down to that point of control, 4,100. Looking at those round numbers, which is 38.2% Fibonacci line. So that's quite interesting. We've got a lot of price action again at that point of control line. So looking like 4,300, 4,100 on the way down, and then under that, it's to the 4,000. Again, a bit of scoop of volume there before peaking. So 4,000 could be a more longer term support. Upside, again, it's got to really get through 4,600. Lot of, well, you've got last 2 or 3 months worth of price action in there to get through before it can get up to say 4,850. But looking at the moment, more weak bearish. And then shorter term, what can we see? Stochastic down, trend down, volume quite evenly spread, maybe a bit weaker as it's gone down there. So it's taking its time to get there. We've got these price zones that might provide some support for a possible reversal. We got 4,400, 4,400, let's round up to 4,450 for the key Fibonacci line there. You're going aggressive short, maybe a stop around 4,375, more less so just above that Fibonacci at the 4,400 mark. And then downwise, we'd be targeting shorter term 4,290 and 4,260. If you are bullish, looking for that reversal in, maybe a stop just under there, around the 4,330, 40 mark for a potential push there. But in summary, looks weak, bearish start to the week for the S&P. Other markets also showing a similar shape around the world. Like I said, it's getting over last week's interest rate frenzy, digesting that, ascertaining what's going on in the world before moving on in its next direction. It does look, like I say, weak, bearish at the moment. If you like today's video analysis, please give us a thumbs up. More to come tomorrow. We've got the FTSE first thing at 9:30 a.m. GMT, then the double energy header of crude oil and nat gas to round up the day. So don't forget to hit the subs and bell buttons to receive notification of that content coming up so you don't miss out. But all that's left for me to say is thanks for watching. Good luck with trading, and I'll see you soon.